The platform may be outsourcing these services from a vendor. That is fine. So the vendor will charge to the platform, platform will collect from me, and that will be a seamless transfer of credit if there is one. Let's understand and ponder over certain more issues. I have 10 minutes. Thank you. Alright. There are certain issues to ponder over here. You would have seen there are cases where the websites often offer us price which is much below our expectations. The cost of the product is, let us say, 100 rupees. Customer buys and pays only for 80 rupees. Do you think the vendor is also making losses in every cases? Answer is no. Let us say Flipkart is offering these goods at 80 rupees. If you were to see and check the balance sheet of Flipkart, there are huge accumulated losses. Some losses is for creation of brand called Flipkart, which also includes certain losses which they bear on the product and services which they sell it on their platform. One such example is this: a product which they have negotiated with the vendor for 100 rupees is offered to the customer at 80 rupees, so that now he gets used to buying and visiting Flipkart again and again, and he keeps buying from Flipkart. So this 20 rupees loss is borne by the electronic platform. Now how typically this transaction takes place? What would happen is, either of course the customer would pay only 80 rupees. Now 20 rupees is to be received by the vendor. Either vendor will raise a debit note of 20 rupees on him on the platform, and platform will pay him the 20 rupees. So he earns all 100 rupees. So on this raising of 20 rupees, the platform will charge, say, GST, or as of today service tax. What is the service which is received here? Who is the recipient of service here? Do we agree with that proposition? Who provides to whom what service? It is just a transfer of 20 rupees which is to take place. So raising a debit note for a so-called service, I am little worried. How would you term it? This is the question which is there being faced by various websites as of today. So what is taxable? In whose hand it is taxable? That is the question to understand. Yes, please. Discount is offered by whom to whom? Discount is offered by the vendor at 100 rupees is the discounted price which is finally offered. MRP is, let us say, 130, which is offered on the website at 100. Platform has negotiated for 100 and now offered for 80 rupees. This is what typically happens. That is why they say more than 60% discount, more than 80% discount. So what happens is this: who has provided what service to whom? That is the question to understand. This 20 rupees is nothing but pure loss the platform is going to bear. One thing is certain: this 20 rupees is flowing back to the vendor from a third party called platform. So vendor should pay GST on 100 rupees, or at least this transaction should earn a revenue on 100 rupees. That much is clear. Now what document the platform should have to make them pay this 20 rupees? Obviously something should come as a claim from the vendor to the platform.
So debit note can be raised for the short receipt of consideration.
So if you say short receipt of consideration, straight away 20 rupees is taxable in the hands of the vendor.
It is taxable in the hands of vendor.
Alright.
Anyhow he has to pay GST on 100 rupees. He has to pay on 100 rupees.
Now let's understand what I am driving at. You are exactly in that trap. What am I saying is, 100 rupees, as a customer I bought certain goods. I am B2B buyer. I will claim ITC on 80. On 20, I don't have an invoice. 20, the invoice is on the platform on which I charge, the vendor charges, who will claim this ITC on this 20? Is there any receipt of goods? No. There is a failure of the ITC mechanism here. That was the point I was coming to it. Now, so taxable amount, everybody agrees that it has to be 100. So who pays is not relevant. We just discussed that there is a loss of likely credit of 20 on 20 rupees. Going further, one will have to ponder and see, work out a mechanism whereby the ITC is not lost in this entire methodology which is adopted. So possibly there could be a debit note from the vendor for cross-promoting the goods on the platform. This is the most logical thinking I could come across. They are doing it. So I am not the only smartest guy here. There are more than 100 such smart guys here. I appreciate that the liability ought to come to the vendor. If vendor is to finally pay on 100, my invoice to the customer should be on 100, then only there is a passage of ITC on 100. But that doesn't happen. As an individual, my accounting will be of 80. Contract with the customer or with the platform. But who issues the invoice to the customer? Vendor. Platform doesn't issue. Please understand, platform is a matchmaker. He is a marketplace. It is not an inventory model. Get me? That is why there is a loss. To compensate that, the logical reasoning I could find out was to raise a debit note for cross-branding, cross-selling, promoting stocks of the vendor on the platform. That is the most reasoning. So that is why there will be a flow of ITC. The platform will be able to claim the ITC. This advice costs 1 lakh rupees. So you charge, I don't charge. At least 2 में से एक जन तो कमाओ यार. They are also smart. That I said, I admitted before, and we are not the only 2 smart guys here. There are hundreds of us. Yes, please. Valuation can? Now his point is very, very clear. Valuation or undervaluation will come when I have to find out the arm's length pricing. Here I am making it available across the board to all 100 customers. It is not to one customer that I am doing it. So that arm's length principle would not get triggered. My understanding. Once again, I understand that issue is pondering everybody. So that is why this ganganat. Now this cashback which is a credit card company gives will come back to me as a credit in my account. Now what happens is, let us say I am a proprietor registered under GST. I am not making things complicated. The credit card of the director was used and the expenditure was debited to P&L of the company. I am not going to that complication. I am simply saying I am a proprietor using my credit card only for my business purposes and furtherance of business. I am clearly covered. This credit is coming back to me in my receipt. Would it be termed as supply in the hands of the recipient? मुझे तो नहीं लगता है. Still, question would be there because everything on the credit side is supply for me. It is so simple. Right. Money is excluded from the word, from the definition of goods and services both, and hence It is not supply of either goods or services and hence not taxable. Aggregator. Now, aggregator, let us say I have hired a taxi from Mumbai to Navi Mumbai and the toll both I pay 35 rupees. When I get down from Ola at Navi Mumbai, I get, let us say, 300 rupees plus 35 rupees as toll charges. Would it be part of the consideration? There is no concept of reimbursement here. My friends practicing on service tax will strictly jump. There is reimbursement. Yes, please. Unfortunately, yes, it will get collected, and on which GST is applicable. Let's go further. I book a ticket on the website, airline ticket. It is international travel, so there is the airport tax which is also collected. So, similar lines, even airport tax will also get part of my consideration. Friends, we had a very clear clarification when we were to determine what is the turnover for the purposes of applicability of tax audit under section 44AB. For an airline booking company, only the commission is the income to be considered for 10 lakhs gross computation. However, today I don't have any such deductions available to me. Would you say that entire amount is considered as a supply and all amount the GST is applicable? Answer is no. Not expected. Not expected. But clarification is required. I stand corrected. I agree with guys that if it is a pure agency transaction, then it will not be. So, I was wondering at the time of the customs duty payment, I reasoned myself and did not put it. But while writing toll charges, I missed out. So, I stand corrected. Toll charges will not be collected. Please erase your minds and rewrite it. I stand corrected. Now, when I am going to the booking for entertainment or any event, there will be certain charges which is collected. 30 rupees for every ticket booked on, say, Book My Show. If I book ticket on telephonically directly at the theatre, they collect 40 rupees. The Bhaidas Hall in the other side of railway station, Vilepala West, Juhu, they collect 40 rupees. Last week only I paid it, so I distinctly remember. Per ticket 40 rupees is the additional amount they collect. For booking the ticket on telephone, they keep the ticket aside with your name written, you pay in cash and collect the ticket 20 minutes before or 30 minutes before the show. So they collect this 20 rupees. Will you term this 40 rupees as electronic? It is a telebooking. Once again going back to that tele shopping thing. Answer is no. Primarily. But Book My Show, if they collect 25 or 30 rupees per ticket, it is collected. Convenience fees, internet handling charges, we talked about it. Commission from theatre. At times, Book My Show would also earn some commission for a promotion of certain events. Let us say there is a concert coming up and that concert is promoted on Ola. As a subscriber, I keep receiving the promotional emails every other day. Now all these things, there is a promotion of the event. For that advertising, the event manager pays certain amounts to a platform. That amount is also taxable. The production house books certain what we call pop-up advertisement on the platform. So when you visit that, automatically that advertisement which is trending is promoted on the platform itself. So-called trending is all paid advertisement. So this advertisement is also taxable on the platform. These event promoting website also charges certain consultancy, how to package their event, how to promote their event. They collect certain fees as consultancy. So all these things will also get definitely taxed. Certain sites provide software consultancy which enables the buyer who has booked the tickets to print the ticket at home and flash it out at the event. Let us say at a theater, you show the your cell phone and the barcode is read, or what we call is M ticket. So that software solution is also charged for. Nothing comes free in this world. There is no free luncheon in this world. So that is also taxable. Payment handling fees, once again, Book My Show will charge to the event. Book My Show will get charged from the credit card company. All these things are changed. There is a change of hand at all levels. There is GST applicable. There are certain sites which share online data information retrievals like Just Dial, TIOL or VAT Online. They have various income streams like subscription. Now this subscription is purely taxable, no doubt about it. Commission which they receive or advertising revenue which they have is all taxable. Online money or wallet. Now, okay, you have e-wallet. Every other bank has an e-wallet. We have Paytm, PayPal.com. There are several e-wallet companies which we have. All these things have lot of advertising revenue also earned by them. There is a subscription model. I as an individual consumer may have a free listing, but the product or the service provider he wants to allow the payments through Paytm will have to register with the Paytm and they earn some revenue from it. They earn revenues also for making the payment facilitation. So for all this facilitation that they get, they also pay AMC for the annual registration for all these vendors. Of course, there is a model which I would want to discuss. If I make payment through Paytm for a Uber taxi which I enjoyed from one place to another place, Uber gets revenue from Paytm. Paytm doesn't pay him all 100 rupees which is payable. Paytm will retain say 5 rupees as commission or handling fees. That is also earnings of the Paytm which will get income. Paytm wants to promote itself on Uber. I am going on the reverse side. Uber will say now we accept Paytm also. Don't need to carry 235 rupees cash, pay through your e-wallet, pay through Paytm. This is what Uber now advertises. That time there is payment flowing from Paytm to Uber. For this cross advertising, they will be earning that revenue. That is also taxable. Friends, there will be n number of questions, but with the GST law as it is and whatever is available to me, I will try and solve the question as it is. No questions. Thank you.
Thank you, Rajat Bhai. Rajat Bhai has successfully navigated us through electronic commerce, and he has also given us many lucrative offers. I think I was a bit worried whether the audience will start going there and start enjoying all those offers. So I'm thankful to all the audience also, they are still here. And he has taken us through those electronic commerce operator, aggregators, brand names, registration, place of supply, logistic warehouse and e-commerce operators and TCS, and lot of food for thought. I think your belly should not be full because we still have the food down, which will really fill up your stomach. So, but many issues that he has given us to ponder and really think on that. And for that, now I would request N.V. Pajpute sir to propose a hearty vote of thanks for everything that Rajat Bhai has really described in the way. I think I also thought of exchanging my mobile, which is already now old.
Thanks, Rajat Bhai. Rajat Bhai, eminent chartered accountant in tax laws and student of goods and service tax laws. He has lucidly elaborated the subject e-commerce transaction right from definition of point of tax to taxable value. Thanks Rajat Bhai. We are looking forward for your further cooperation. Thank you.